everyone, I'm Zoe Ho, Senior Director in the Office Leasing Advisory Team for Singapore. It is my pleasure to take you through a snapshot of the Singapore office market for the fourth quarter of 2023. The Singapore office market continues to show its resilience. According to our latest property market monitor, the fourth quarter of 2023 saw leasing activities from small and medium-sized space occupiers remaining steady, supported by new setups and proactive efforts from landlords to attract tenants. Prime office spaces in the central business district, which are well sought after by multinationals and financial institutions, recorded a negative 0.2% rent growth quarter-on-quarter for investment-grade offices. This marks a slightly slower decline compared to the previous quarter. In terms of supply, two buildings have experienced a pushback on their completion date. The first is Keppel South Central, which postponed its completion date to the first quarter of 2025. Meanwhile, IOI Central Boulevard Towers is now slated for completion by the first quarter of 2024. As the only new kid on the block at Marina Bay in 2024, it totals 1.26 million square feet and is approximately 40% leased to Amazon and Morgan Stanley, with about 700,000 square feet of space left to be leased. The fourth quarter of 2023 has solidified two key trends among tenants. First, flight to quality. There is healthy interest among tenants to upgrade to better quality office spaces that prioritizes sustainability and wellness initiatives. This past quarter, we have witnessed numerous ongoing negotiations for up-and-coming buildings such as Keppel South Central, IOI Central Boulevard, and Shaw Tower. Buildings with Green Mark Platinum certification, including super low energy, efficient energy usage, and enhanced health and wellness feature, are growing in popularity among environmentally conscious organizations. These tenants might be focused on achieving their net zero carbon goals by 2030 to 2050 and look towards occupying a building who can support their sustainability goals. Another occupier trend that we are seeing is a rise in demand for flexible workspaces. 64% of employees in Singapore have already implemented a flexible approach to hybrid work to meet the evolving needs of their employees. According to our recent report, Is Hybrid Really Working? Such organizations seek flexibility and cost efficiency when looking for new office premises. In response to such requirements, we are seeing landlords create thoughtfully designed workspaces such as the fitted-out units at Asia Square Tower 1, Marina 1, and Network Hub operated by GOCO Midtown. As forward-looking landlords continue to adapt to changing tenants' needs, we could see other strategies such as flexible lease structures, tenant-centric amenities, and enhanced property management services come into play to attract and retain occupiers. While we expect the office sector to remain soft in the first half of 2024, pent-up demand and flight to quality could mean recovery in both the leasing and capital markets by the second half of the year. Thank you for watching this quarter's Office Real Talk. I hope you found this useful and we'll see you next quarter.